Hello, everybody. So, as I assume you all know, Blake is on his way to California. Stelios today has something to attend to, so he's not going to be with us. So it's just you and me. And we're going to go through the usual process. We're going to do the true. No, he's actually not on vacation. She is helping his mom move back to Arizona. So we're going to go through the usual process. We're going to do the bias chart that Blake would do. And then we're going to go over talking a little bit about the market, what is important to note that has happened since yesterday, so on and so forth. Yeah, he ditched me. Yeah, the little bastard, he ditched me today. So, okay, let me pull up the bias chart to begin with. Perfect. So here it is. I know you can't see it, but it's okay. I'm going to pull it up after. I'm going to pull it up after we finish with it, so you can see it, take a screenshot, so on and so forth. And let me also bring the 4-hour charts in front of us so we can determine short-term support and resistances. Okay, so you know something, we can also, concurrently, while we're doing the bias chart, we can concurrently talk about some of the things we would anyhow talk when, it has to do with the equivalent pair. So for example, in the case of the Euro USD, I would mention today that Euro USD seems to be breaking below this trend line support, right? I know it's early on the day. Yesterday, we actually stalled exactly there and we rebounded a little bit. So far today, we seem to be slicing through it. So keep in mind that is going to be a bearish, obviously, technical development, which is still underway, right? So keep that in mind. Now, if we focus on a shorter term horizon and we look at the 4-hour chart, you'll notice that they have this descending channel here. And as you'll see, we're currently testing this channel's trend line support. So I'm not going to indicate this as being support since we're exactly on top of it. We're going to talk about which is the next downside target in case we break through that, which is the 116 area, which is also the 127% extension of the last rebound higher. So 116 is going to be our support for today, and having to do with resistance for today, it's going to be here at 116.80, and with the current market type of movement that we have, I'm going to have to switch the Euro USD to bearish. Of course, it remains to be seen by the end of the day if that is going to be confirmed. Now, let me go first to the daily chart again, and then back to the 4-hour chart and talk about the USD Swiss. Now, the USD Swiss, if you notice, has broken out some time ago from this nice symmetrical triangle, which dates back at the beginning of the year, right? So it's a very valid technical formation. And hence remains bullish as long as we trade above 92.10. Now, zooming in closer, you'll notice that here is our support area. So 92.10. And the next resistance is the 93.33 high. So 0.9333. And the bias is bullish. Now, going to the cable, we talked about the cable yesterday because it was one of the markets I was focusing on due to this formation. You can see this descending triangle there. So we've cleanly broken through it, and we're currently testing the 50% fib, right, of this last move higher. If you look at it on a shorter term chart, you'll notice that we even had this descending channel, which we've broken through from, right? So from this point on, 135.17 should be resistance in case of a rebound there. And the next downside target is at 134.10, the 161.8% extension of the last rebound, right? So 134.10, and we have to switch the bias to bearish. Now, let's move on to some of the commodity currencies, Aussie and Kiwi. Let's do what we did before. First, have a look at the daily view and then switch to the 4-hour. So Aussie still retracing the prior move higher. It has taken more time than it took to move to the upside. But we still haven't retraced all of it. So I'm very, very skeptical in turning bearish here. I have to tell you that. But for the time being, we're definitely under pressure, and this needs to be said. So let's look at the 4-hour chart, and you'll notice here that we had this little rebound, which was clearly corrective in nature, right? And it's not a surprise that we are breaking lower. Next downside target is rather close, the 78.6% fib at 71.85. So 0.7185. With resistance now being at 72.50. Kiwi more aggressive, and it's not a surprise. I know it's not part of the bias chart, but it was one of the things I wanted to talk about. Here is a view of the Aussie Kiwi. So we know how the Aussie Kiwi was under pressure for a really prolonged period of time. And recently it found support in this descending channel trendline support. And it has now actually started accelerating higher, finally, after a long period of time, finding a bid, right? Now, of course, from managing to rebound somewhat after a long period of time that it was constantly under pressure, to actually having found a low, there is a distance between those two, right? So for the time being, I would remain focused on the channel. And if we make it to the channel's trend line resistance, then we have to see what's happening, because if and only if we break above it, we can start talking about a change in behavior. Until that happens, for the time being, this can just be a healthy rebound and nothing more than that, right? So here's the Kiwi on the daily chart, still remaining within the bigger descending channel. Look at it here in green, right? We got rejected from it. We seem to be accelerating lower. And if we now go back to the 4-hour chart, you'll notice that we've sliced through, just a few hours ago, we've sliced through the 61.8% fib. So, that's an intraday bearish development. And the next downside target is the 78.6 at 68.83. So 0.6883, with resistance now being previous support at 69.50. I'm going to keep both as indicated as neutral, right? Now, very short term, they're bearish, but they haven't produced lower lows, so there is a difference in the divergence between them and the euro and the pound, for example. So I'm going to keep them designated as range, having to do with the Aussie and the Kiwi. And I'm going to do the same with the USD CAD, which we're going to move to next. First of all, by examining it on the daily, as we did with the previous ones. And here it is. So notice how the USD CAD is still holding within this channel, found support at the trend line, support on the 50 DMA once again, rebounding. Yeah, admittedly, the rebound is not impressive in any way, but the fact that we're holding above the trend line support makes it impossible for me to turn bearish yet, although I do believe that it's very likely that we're going to sooner rather than later breaking down here and pushing lower. That's not the case yet, so I'm going to be leaving this to neutral with 126 being support. Let's go to the 4-hour chart so we can look at it more closely. Right, 126 being support, 125.90 to be exact, 125.90. And next resistance, let me redraw this, by the way. Perfect. Okay. And next resistance being at 127.50. 127.50. Let's switch to the leaving it to range also. Let's switch the USD NOK. Nice rebound from the USD NOK, testing once again this horizontal trend line resistance as we're still in some kind of an expanding triangle. So far, this formation looks corrective to me. It still does. I still favor the downside, but admittedly, if you look at so many days of price action, we have to leave this to neutral because for the time being, we're just in a choppy consolidation, right? With resistance being very, very close, actually, 875 roughly. 875 and support remaining at 852. 852, leaving it to range as well. And we can move to USD MXN, which depends on how you decide to draw the trend line resistance. It seems to be breaking out. Now, the reason I sound a little bit skeptical is because we don't have many points from which this trend line resistance passes from. So take it a little bit with a grain of salt. Nevertheless, it's not a bad trend line, right? So in the short-term time, in the short-term time frames, we have to consider this like a bullish breakout, with the breakout area at 2019 being support from this point on, and the next upside target being this previous high at 2075. And I have to switch this to bullish. There you go, bullish. Now let's have a look at our precious metals, gold and silver. Here is gold remaining within this descending channel, trading part of the day yesterday and most of the day today below the 61.8, with the next downside target being the 78.6 at 1718. 1718. And resistance from this point on being at 7080, 7075, 1775. Silver finally breaking through the $22 barrier, right? Previous low, we have this trend line support. And I've said in advance, several days in advance, that we break through 22, which I said was very, very likely based on the price action. The next downside target is 21, so I have no reason to change that. Support is at 21. Now, it's still early on the day and we've just broken through. But I have to designate from this point on 22 as being resistance now that it has broken down from support. Yeah, I know it's early on the day and there's a chance that the pair is going to, the metal is going to pull back by the end of the day and will never close below 22. But in any case, since the support, resistance and bias chart is more of an intraday instrument, right, I'm going to put 22 there. Bitcoin. Still within this orderly type of a pullback consolidation type of formation. Looks like a descending triangle for the time being. I'm saying for the time being because you never know how it can transform itself. We know that 42,500 is a pivot area, but unfortunately the market has made it less of an important area during the past several days because we keep oscillating exactly on top of it. So we're crossing a little bit below it, we're crossing a little bit above it, and again, same and same again, which doesn't help with the fact that it's a pivot area. So I'll have to go shorter term and determine this 44,700 area of being resistance. 44,700. And the next downside area of support being that low at 37,250. 37,250. With the bias being mostly range at the moment. So I'll leave it as range. Now we have three things remaining. It's the DXY, the yen, and the S&P. So let's start from the DXY. So we talked yesterday about the possibility of the DXY breaking above this triangle, and it's not a surprise that it's doing so. So this trend line resistance should be support from this point on, and it's passing from 93.65, 93.65, 93.65, nice. And as I said, since yesterday, the next upside target is 94.50 to 95, that area. So I'm going to put the first one, which is the 38.2% fib at 94.47 to be exact, as resistance. Now, having to do with USD yen, where are you? Here you are. We are producing what looks to me like a corrective consolidation. Now, is it going to be a pennant? Is it going to be a flag? But I don't see anything bearish here. I have to tell you that much. So support at 111.20, 111.20, and the resistance being the very, very recent high at 111.70. Let's say roughly 111.70. And my designation is clearly going to be bullish in this case, as with the DXY, obviously, because we're breaking out. So that needs to be said. And last but not least, actually, as I was explaining other days, and I reiterated on the F.A.C.E webinar today, probably the most important chart currently, which is the S&P chart. Here it is. Little rebound earlier today, found resistance at this horizontal support resistance area. As long as we trade below 43.90, there is absolutely no reason to be bullish, with the next downside target being yesterday's low at 43.46, 43.46. Designation being bearish just because it's a short-term designation, right? Let me make that very, very, very clear. And let me confirm. Yeah, I think I have everything. Perfect. So let me bring it here. Let me also take a screenshot. Perfect. So there you go. This is your buy chart. I don't know. Do you want me to keep it a little bit longer? Let me keep it for a few more seconds. Okay. So this is our bias chart for today. Now, let me see. We've had several alerts, price alerts going off as we were doing the bias chart. So let's have a fast look at the markets here. Dollar doing its thing, everything being under pressure for the dollar. I think that more or less means that equity indices are in danger of rolling over again, because we are slightly positive on the day. You can see the Nasdaq is almost 0.5% higher on the day. S&P a lot less, like 0.14 high on the day. So I think that they are in danger of just continuing lower. So keep that in mind. I wouldn't be very I wouldn't be feeling very comfortable trying to buy indices here with what I'm seeing in the rest of the market instruments. So keep that in mind. Now, since
I'm here, Steve, by the way. Hello.
Hey, Stel.
Hey,
welcome back.
Hey. Yes.
So since you're back with us, what did we have? Was there anything you wanted to talk about? We just finished the buy chart, by the way.
Ah, you did. Have you uploaded it, or shall I take a snapshot?
No, I haven't uploaded it yet.
Okay, let me take a snapshot. I've been out for the last 20 minutes, 30 minutes, and I see that
there you go.
Hold on, there we go. Okay. All right, let me just snap it. Snapped. We mentioned a few things on F.A.C.E. The main thing now remains the debt ceiling. October 18th is the deadline. That's what Janet Yellen said. And from what I read, she said that if this isn't increased, then there's going to be problems in the financial markets, etc. I think we all know this is some kind of a theater, and they're going to do it anyway. The interesting thing is that I was reading that there are members of Congress who are now really talking about and in favor of the Treasury minting $1 trillion platinum coin. They've been talking about it for a while.
Oh yeah. The first conversations about it came several years ago.
Yes.
And as always, whenever I hear a rumor of something extremely ridiculous,
it's happening.
Yeah, that it has been discussed, seriously discussed.
Yeah.
And that it's something that they might bench, they might shelf, temporarily. But usually when something gets discussed, then at some point it re-emerges, and usually the next time it comes up, it's a lot more serious than just
Yes. What I don't understand is the following. They say, it's a great solution so that basically the debt doesn't increase, because what they do, they mint this ultra valuable coin, and then the Treasury deposits it with the Federal Reserve, and then the money is created, and it's there. So basically, I was reading that there are senators who are saying, look, you can do this, and then how much? What's the U.S. debt? $18 trillion. Okay, let's do 18 of those. Yeah. 18 of those, and pay back the debt.
First of all, I hate to break it to you. It's $28 trillion.
Sorry, 28. Yeah. What did I say? 18. Yeah.
Yeah. To be honest, just a blink, just a glimpse away in time, it was 18.
18. Yeah.
Because the trajectory has really become parabolic, really.
Yes. So basically, they're saying, mint, 28 of these and pay back the whole of the debt, and that's a solution. And I'm like,
I have a question. I don't understand then why Zimbabwe isn't one of the most prosperous countries in the world.
Yeah.
Because they try to do the exact same thing. And I know. Somebody's going to tell me, yes, but Zimbabwe never had their currency being the world reserve currency. But the next question is, with what the US is currently doing, and especially if they decide to start minting coins of 1 trillion worth each, how long do they believe that people are going to be accepting the dollar as the world's reserve currency.
You just can't go down that route. You just can't. But yeah, so that's now the main thing that everybody's waiting for, and otherwise markets are mixed. We're back up a little bit after yesterday's drop, but again, it's end of month, and I don't trust these moves too much. But it seems that the only thing moving is silver today. Have you seen it? The flush that we had.
Yes, we did the bias chart as well. Silver is now trading below the 22 support area, which isn't much of a surprise because, to be honest, it was trading, very heavily.
Yeah, we've been talking about this for weeks.
So yeah, here is a short-term view of it as well. We were forming this little symmetrical triangle, and we've now broken through the symmetrical triangle, and I think this is a bearish development targeting 21 next. So yeah, I do think that this is an interesting technical development, not an unexpected one, but an interesting nevertheless.
I agree. What else? That's about it, I think. Yeah, I mean, I didn't have much else to say. We talked about a few things on F.A.C.E. No, that's it for me. I mean, currencies, the dollar is still rising. It's still trying to recover. And I think, where was it? Hold on. I was looking at the DXY, and there was a fib 94.47, I think it was.
It's a 38.2.
38.2. Yeah, there you go. So that's the obvious target. And that's driving many other markets, as we know. Equities are not going to like dollar strengthening, but the good thing today is that yields are going lower, so that at least keeps equities balanced, I think. But
it makes sense. I mean, at some point, risk off would spill off over to to the yields.
Yes.
But irrespective of that, yields are still in breakout territory if you look at shorter term charts. So a little bit of a pullback indeed. But technically speaking, we're still in breakout territory in the 10-year yields. And if you notice, USD yen is also doing rather fine despite all that.
Yes, that's true. Yeah, I didn't have anything else to say, so I don't know if were you answering questions now? What were you doing?
I was about to start answering questions, and that's when you came. So your timing was impeccable.
Perfecto.
Indeed. Okay. So silver isn't the only thing moving. Pound is moving again. Yes, true. We talked about it before. It has broken down from an important trendline support, and it's now trying to break down from the 50% fib as well. Targeting next 132.75, which is the 61.8. So yes, we mentioned it yesterday when it was attempting to break down, and I mentioned it again today when we were doing the bias chart. Cable is indeed on the move. That's why I've also turned its designation to bearish, at least in the short term it is. And as I said before, in my opinion, if we continue seeing this type of a move, then you should expect that equities will not have a good day despite being positive on the day for the time being. By the way, last time we had a look at it 10 minutes ago, the Nasdaq was almost 0.5% higher, and as we speak, the Nasdaq is just 0.19% higher. So we might have already started seeing equities rolling over. We'll find out very, very soon. Okay, let me go through some of your questions if you have any, guys, girls. I saw a cartoon today. Guy was at the ATM out the Fed, and the message was, "Please wait, your dollars are being printed." I wish it was funny, but it's too real to be funny. You know what I mean? Yeah, it's too close to reality to be funny. Okay, any questions? Going once. USDMXN. Oh yeah, we did cover this when we were doing the buy chart. It is breaking out, so keep that in mind, right? Here it is. And as long as we are in some kind of a risk-off environment, you should expect USD MXN to do well, and you should expect this trend line resistance to be support from this point on, with 2085 being the next upside target. So technically speaking, we've had a development here yesterday, and we're seeing follow through today. So short term, I don't think you should be fading this. Aussie USD is, let me pull it up. Here it is. Aussie USD is pulling back. Now, as I said before, having to do with the Aussie and the Kiwi, I'm a little bit skeptical in turning bearish yet, because I clearly see, especially the Kiwi, in a corrective pullback, which started at the end of February. Fundamentally speaking, I'm also bullish as well, and in not such a clean one, but also the same applies to the Aussie, some kind of a corrective pullback. So intraday, yes, they're bearish. Dollar seems to be holding its ground very, very well. But I would rather be short other things against the dollar and not the Aussie and the Kiwi yet. 71 is the next downside target, so keep that in mind. Anything else? My pleasure, Lorraine. My pleasure, Vladana. Okay, then. I'll try to be as much as possible in the chat room, so you can mention me if you want something there today. I'm doing other things as well, but if you mention me, I'm going to see it now that Blake is away. So if you need anything, just let me know. I can have a look at something for you later on in the chat room as well. Also, we're going to be doing together the daily roundup today in roughly 2.5 hours from now. So, something has come up until then, you can ask questions there as well. So, we had Dimitri. Sorry, Dimitri, you wrote it in the Q&A. You have a question about Eurocad. I'll be more than glad to look at it for you right now. And here it is. Nothing is happening with the Eurocad because the Eurocad is still trapped within this symmetrical triangle, which is for the time being contained within this bigger one. So nothing to do yet, but a break below 146, 146.50 is going to be a very bearish technical development. But in my opinion, nothing to do as long as we trade above 146.50 and below 150.50. So between these two levels, in my opinion, there is absolutely no trend here. You can clearly see it. So I wouldn't be touching it for the time being. It's a good one to monitor though, because at some point it's going to break out, and probably when it does, I'm pretty confident it's going to produce some decent follow through. Okay, so guys, girls, see you in the chat room, and see you during the daily roundup. Whatever questions you might have until then, feel free to ask them, and I'll be more than happy to cover them.
Thank you, Steve. Thanks,
bye
everybody.
until I see you then. Bye, Stel.
Cheers.